My next guest says stocks have risen in June for the right reasons, softer than expected inflation, and he is seeing more positive signs ahead, and he's sticking with the big names in AI. Tom Lee is here. He's Fundstrat Global Advisors co-founder, managing partner, and head of research, and he's a CNBC contributor. It's great to see you.
Yeah.
I want to start in a little bit different way than normal because Doug just made a really interesting point about millennials and how they're so conservative in their positions. And whether you've experienced this phenomenon firsthand or not, what do you say to those who need to be coaxed into a market that is ever at record highs after a run in stocks like NVIDIA, like we've rarely before seen? I mean, is the water still safe?
I know investors generally aren't comfortable buying things at a high, but if we're mid-cycle, which we probably are, then we're going to be making a lot of new highs over the next 5 years anyways. And I think there's a lot of statistical support showing buying at new highs actually has a better win ratio than attempting to buy at lows.
Well, it's also true that for all of our lifetimes, the stock market has generally gone up. So yes, there are pullbacks. Yes, there are corrections. Yes, there are financial crises. Yes, there are pandemics. But is there any reason to believe that the fundamental nature of the beast has changed for the worse? I mean, I read this research sometimes, I'm sure you've seen it, that says, oh, we're going to have permanently lower stock returns now. 4% a year is the most you should expect and things like that. We've pulled forward gains. I mean, do you believe there's credence in any of that?
I've heard that exact statement about the new era of low returns since 2008.
Right.
And stocks have compounded at pretty much the historical average since 2008. I think as long as there's skeptics out there, that means there's a lot of fuel for upside.
Mm-hmm. So is NVIDIA the thing that you look at and go, well, this could spoil the party, i.e. it becomes too much of a good thing. It really starts to lift into some kind of bubble, draws people into the market, really extends valuations, then we have to clean up the mess.
There's a lot of people trying to top tick NVIDIA, saying that they don't want to own it because it's expensive, but it's a 30 PE stock
Right.
that sells something that no one else actually produces in the world.
The one thing it's not is expensive.
Yeah. So I'd say I'd feel very differently if we were discounting NVIDIA being larger than global GDP and at 100 PE, and everyone's saying there's no way it can be stopped. But because everyone wants to sell NVIDIA and try to call a top, I actually think there's still a lot of upside.
When I hear anecdotes, like I heard at a fundraising thing the other night about how all the local kids own NVIDIA, what should I think when I hear that kind of information?
Well, it makes sense. I mean, NVIDIA is the largest stock, so, everyone should own it. It's almost like if someone said, I'm selling because everyone owns the S&P. Everyone should own some S&P. It's really a bearish sign when someone says the S&P won't ever go down. And I only hear people saying the S&P's topping right now.
I do remember people saying stocks never go down a couple of years ago. Then we finally had a correction. I think we've had a couple maybe since then. What kind of paradigm are we in now? We hear people saying, like Mark Zandi did, well, the Fed needs to cut because otherwise the economy could take a turn for the worse. We know rates are probably higher than they need to be. Do you need to have a view on Fed rate cuts in order to support stocks continuing to move higher?
To an extent, I think that the big lesson for the last 2 years is the S&P has endured some pretty severe rate hikes. So we know companies are managing this cycle well. If the Fed turns neutral or dovish, that's even more positive for stocks. So I think that the environment for equities still is good because they survived a stress test. It's only bad if the Fed has to raise rate.
All right, guys, this is the part of the video where I'm going to break down the stocks that were mentioned in the CNBC clip. Today, we're going to be looking at the SPY and NVIDIA. The S&P 500 is what we're going to start with first. If this is your first video, the blue line is the 45-day moving average, and the green line is the 200-day moving average. So you can see right off the bat, we're massively bullish. We're going up and to the right. We had a pullback consolidation back here from August to November to slingshot higher. Then we had another little pullback from mid-March to mid-April. And then we've also been slingshotting higher after that. I do expect a slight pullback over maybe several days to several weeks. I think we're coming back to the 530 area to the 525 area to further make it support to then keep going higher. We've been majorly bullish over these last couple months, and now we've had a couple red days to end the week. I think we got a little too bullish back here and we left a gap in the chart. So I think that might be the first stop if we do continue to go lower next week on Monday. I think we'll head to that 535 area as a very minimum just to close that gap, because most gaps like to be closed on the charts. So we should have price action come back down here, fill this. It might even keep going a little bit to the 530, 525, back to this high that was resistance, make it a nice support, and then keep rocket shipping higher. But as of right now, we're holding this 45-day moving average. He says every single top is a buy, and even if we dip after you buy, we're going to make new all-time highs over the next several years. So that high is not going to matter and should be a good buy in the long term. Let's go ahead and look at Nvidia, the stock leading the charge. This stock has been absolutely bullish, holding that 45-day moving average, hasn't touched it since back in April, and has just been slingshotting to the high. We've had a pretty decent pullback, nothing trend changing. The Nvidia trend is not over, the hype is not gone. We just got ahead of ourselves. Almost 12% given back in 2 days. That's a pretty decent pullback. Something kind of like this. We had a major run, 2 days to kind of get us back, then another couple weeks of chopping around to make that double top to actually send us a little bit lower. So if we can get another type of situation like this playing out, we're going to get some good dip buys around 120 to 115, guys, and that would be juicy. That might even meet around the 45-day moving average, and we know Nvidia is far from over. We're just a couple weeks into the 10-for-1 stock split. They just announced a dividend. They're still growing earnings at unbelievable rates, guys. This stock is nowhere near stopping. We kind of hit it right around 124 to 122. We look like we have some support and resistance area here. If we start to break 120 and go lower, we have another one around 115, and then we have some gaps in the chart all the way back down to 100. I can't imagine Nvidia will start slipping and lose momentum and drop almost 40% from 140 to 100. I can't imagine that would happen, but nothing is impossible. These stocks have gone up hundreds of percents, and even if it did, that's still not going to be the end of Nvidia. That would be a major buying opportunity, and it would be very bullish. I hope you guys enjoyed the video and the breakdown. If you did, please smash that like button and subscribe, and I'll catch you in the next video.